Hey, what's up, everybody? So I was trying to talk to my platform and I was like, all right, should I go live on Twitter? And I was going to go live on Twitter and I couldn't figure out how to go live on Twitter. Just wanted to shoot a video or take a picture of me. And I've got some downtime right now. And I know there are a lot of questions, at least people from my platform, 349 Discord. So I was like, all right, today's a confusing day in the market. A lot of people are talking about what the Fed's going to do. The great thing is, people are like, oh, I don't want 75 basis points or 100 basis points because the market will hate that. And it's quite the opposite. So a lot of the times when the market fools you and you're not understanding what's going on, you need to know what you're rooting for or what to expect. So if it's 50 basis points, we'll just get right into the Fed right quick. And then we'll talk about some stocks in the market and direction. But if it's 50 basis points, what the market will say is the Fed or the government is not doing enough to curb inflation. 50 basis points, they will sell the market. Now, if they start selling the market, you have to understand where the SPY is going to go to. And it's not going there today. But if it's 50 basis points and it's less hawkish talk, then they're not doing their job. Inflation will run rampant and we will go into recession. And that's going to drive the market, the SPY, down to around 350 to 360. And yeah, we're sitting at probably 378 this morning, right? So you're talking about what? Another 6, 7, 8% downside. So if you're thinking, and here's the problem. Here's the problem with the downside. It's like you can only squeeze so much blood out of a rock, right? A rock is hard, and so many stocks are beaten up that it's almost time to get in. And I've mentioned this for a few days, and I got a little upset yesterday because Kathy from ARK actually agreed with me. She said we're damn near close to the bottom. So yeah, I believe we're damn near close to the bottom. So again, here's what could potentially happen. If the Fed comes out and they say something like 75 basis points in June and 75 in July, because we know it's June, July, September, and then November, the next meetings, then you know they're going to be aggressive. And what they're telling you is we're tackling inflation. We're doing it so that prices stop rising up. And then people say, okay, if prices are going to stop rising up, then I know the market's going to settle. That's why it's a positive, because most people would say more is worse. No, it's like ripping off a Band-Aid. If the Fed steps up, and I know we have a lot of people on the platform that said 50 basis points. Powell doesn't give a shit about the market. He hopes the market drops. He probably bought puts. I mean, those are all funny things. But the truth of the matter is, to right our economy and understand the U.S. economy is a lot stronger than other countries in the world right now. So we're leading the way. So if we F this up, right, it's going to be a worldwide issue. All right. We think it's done. It's not done. If we get this right, our markets will straighten out. China will take the hint. Germany and London will follow. So it'll be a good thing. Real quick, and I see some people are making comments. Please make comments about stocks. I will pull them up. We can analyze them together. That's the point. I don't usually do this. So I want to show you guys exactly what charts I'm looking at, what how I would gauge entry, what I would think about exit. We'll condense the charts and we'll say, okay, if we're holding this for a week, where could it possibly go? And I mention that because the SPY is sitting at 378. And if you watch my pre-market video and we were at 370, I said we're going to go up to about 378 before we might have a pullback. And the range today would be 6.5 points on the SPY heading into the Fed's talk. Okay, on the QQQ, I also said we were going to do 280. So let's just see. I just want to see if I'm right. You know, it's always good to see that. QQQ, 279. It was as high as 281. Okay, so the market's just dropped. So here's the way of thinking about the markets right now, okay? As we head into 230, and again, I mentioned this in Discord earlier, there's no reason to gamble. There's no reason to say, oh, I know it's going to be 50 basis points, or I know it's going to be 75, or I know it's going to be 100, and that I know when it's announced, the market's going to react this way. Because if we had a crystal ball, shit, we wouldn't even need to watch the Fed. We'd just be like, we know this stock's going to end at whatever price, and I'm going to buy these options. But the point is, it's not like the market has any reason to go gangbusters through the roof prior to the Fed's announcement unless the data is leaked. So when I look at something like, and I'll show you exactly what I'm seeing, I look at the QQQ, right? and it came up to a top, and now it just threw up on itself, and it'll probably waver around here, but it's probably going back up to the top side. So this is perfect for anybody talking about whatever stocks it is right now. The QQQ at 279.65 is probably going to bounce up to 281 at some point before the Fed speaks at 230. Okay, so even if it drops a little further now and it goes 279, it's probably going to 281 before the Fed speaks. So strategy, if you're looking to get into a day trade, right? And I see Amazon up here. So let me just pull up Amazon real quick, AMZN, and I'll pull it up on the thing with me as well. Okay, so it's 104.92. It was probably a little lower. Its high on the day was 105.45. So let me first pull up Amazon. Let's add it to my watch list. AMZN, boom, added. Yep. And now let's get rid of this. Let's click on it and let's share my screen because that's the best way for you guys to see it. All right. So Amazon is up there. Let's just go to the chart myself. I'll look at the 1 minute, the 3 minute, and the 5 minute. So the 1 minute, I mean, the selling pressure, as we've seen for the past 30 minutes, is somewhat significant because it dropped. But then you go back to your strategy and you say, okay, if your strategy is, or Matt's strategy is that the QQQ will go back to 381 and the QQQ is sitting at 379 right now. So 2 full points, which is like 0.6% by sometime before the Fed speaks, then Amazon will likely revisit its highs of 105.45. So yeah, I mean, if I was going to make a day trade, I would be in at 104.92 and I would ride it up about 60 cents. So in order to make Amazon a day trade, I would have to choose an option that expires this Friday. I would have to choose in or at the money. So let's see, Amazon, let me just open up the options right here, call options. They're only 2 days out. They're pretty expensive. So again, it's risk versus reward. So I'm not, actually, they're pretty cheap right now. What was it, like $2.40, something like that? 10.20, they're selling it off. I would probably put in, I wouldn't even bid what it is now. I would hope Amazon goes down a little more first. I mean, it's 244 on the bid side. I would look to pay maybe 15% under that. So I'd want to be in close to 212, which would show a significant bounce because anything's possible. Here's the worst thing about trading. If you decide you're going to be right and you're like, Amazon's at 104.95, and instead of letting it pull back to like 104.50 to get in, you jump in here and then it goes down. So you're in a call position and it's going down. And then all of a sudden you're down 20% rather than saying, okay, I was going to bid 240. I put in at 208. I just saved 12%. So rather than being down, 20%, you're like, okay, I'm in the position. I'm down 3%. And then it bounces like you think. And it's finally at 105 or 105.50. Like I say that it's going to be before the Fed speaks. I think it'll hit today's high before the Fed speaks. So 105.50. It could go higher. Again, I tell you guys, based on the timing of the market, right? And let me just bring up the SPY so we can analyze the SPY together because that's easy because that'll tell us direction of the market. Where is the SPY? Bum, bum, bum. Where is it? It like disappeared on me. Somebody stole the SPY. How do I add it? There we go. SPY. SPY. I guess someone stole it. All right, but now it's up on my screen. So 377.86. Let me go and share the screen so you guys can look with me. All right, now let me go over here. Okay, I'm gonna set up a 15-minute one first, just to take a look at the larger picture, okay? So when I look at the 15-minute, and you guys can look with me, I'm gonna point right around this 15 where my arrow is right here. You could say there was buying, and even the sell-off, and we know nothing goes straight up. It's not like you're gonna see 10 straight 15-minute sessions of buying. That just doesn't happen. So you'll see it, and then you'll look for the big spikes. So we saw a spike a couple of days ago, so we know they're interested. We're seeing spikes here, 1, 2, 3, 4, and then volume is low. So as it's consolidating, volume's low. So let's go to the 5-minute, and you're seeing the same thing. Okay, so this jump right here told me this is fair level. So we're right about here, 377.34. So as the SPY sits at 377.86, I say to myself, it could go back to this jumping level of 377.34. So again, if I'm bullish on the market or whatever stocks, I'm not entering right now. We're in no man's land. I need a solid entry. So even if I think the market will get stronger, I want it to pull back a little. So at 377.75, the SPY is still about $0.50 too expensive to enter. So that goes for any of your positions you're thinking about entering. If you have a bullish trade that you want to enter, I'm telling you, you can pull back. Now I'm watching Amazon at 105. It hasn't quite pulled back. So again, I wouldn't be trading Amazon right now. Now the SPY is now 377.59. So I'm saying, okay, we're close. We're 30 cents away. 30 cents away, I could take my first position. I could buy 1 or 2 calls and know they won't expire today because I want to give myself enough time. So I'll probably go out to Friday because we know Monday is not trading. If you don't go to Friday, you have to go to next Wednesday. So I think that would be like what, the 23rd or something to that. Okay, so let's look at some questions right now. Let me see if we can talk about some stocks. Okay, Amazon we just spoke about. Mr. Chris is looking at Apple puts. All right, so Apple puts, we can look at Apple or you look at the QQQ. So let me just bring up the QQQ because Apple makes up 7% of the SPY, a good portion of the QQQ. So you're really going to be tech focused. You can't say Apple's going down if tech is going up. So again, look at the 15-minute chart. QQQ is completely mixed right now. There was some nice selling this morning. So yes, I wouldn't turn you off of Apple puts. In fact, Apple puts, we'll see right now. Let's look at the 5-minute. 5-minute, we saw a good spike up to here. Top end of the stick. Yes, it went down, then it beast back up. Yeah, it's right now, you're in no man's land. So I wouldn't tell you Apple puts or Apple calls. And again, I'll compare that to Amazon that we were using at 105. And I said Amazon's high was $105.50. And we'll see that before the Fed speaks. So let's use a scenario. Oh, you guys weren't watching the chart with me. I'm sorry. Fuck me. I'm sorry. So here's the thing. If I say Amazon's at 105 and it will go up higher, and I say the QQQ is at 279.64 and it will go up to 281 before the Fed speaks at 230, then that's telling you Apple, wherever Apple is also going to get stronger. And Amazon's doing it right now. So let's look at Apple. And again, I'll just tell you the price on the phone. 133.89. I mean, yes. So here's your Apple. I'm just showing here. Here's your Apple puts. You wouldn't get involved in Apple puts when you're towards the bottom. This morning, if you're like, oh, the QQQ is too strong, Apple puts make sense, nothing goes straight up, then yes. But your thinking is the opposite. In fact, I would be getting into Apple calls right now. Apple calls right now, same as Amazon calls, because I think the highs will be tested before the Fed speaks. So again, maybe that's the problem. Maybe you need to look at things, and if you're late, sometimes you jump on anyway. So Apple puts weren't a terrible idea while the QQQ was spiking to 281 this morning. But as the QQQ pulled back, and I think it'll hit 281 before the Fed speaks, then you're going to be fighting the trend. You're going to be saying, man, I hope, because anybody that's taking a bearish position as the market recovers today, here's what you're going to be doing at 230. Man, I hope the Fed fucks up what they're saying. If they screw up what they're saying, the market's going to tank and my position will be okay. I'm down 40%, but I'm going to be even if it tanks, or maybe I'll even be green. That's a terrible position to put yourself in. To be like, oh God, I hope this happens, especially since the market showed you some resistance yesterday and it's showing you green today. And I mentioned if the bottom was indeed in, the market would have to be strong. So yeah, we're only an hour and 15 minutes into the trading day. So I'm not claiming victory for the market. I'm saying I would be extremely cautious, and taking a position when you're in no man's land is very risky. So Coke and Bank of America, different. X we spoke about. So yeah, I mean, we could talk about materials. So let's look at X real quick. Let's see where materials are right now. QQQ, Cleveland Cliffs, US Steel, up 2%, up 1%. I mean, both fell hard. Material plays fell hard. So they're probably going to bottom at some point today, X. And let's take a look at Coke. And I'll pull it up. If I find an interesting chart, I will definitely pull it up in a second. Okay, yeah, Coke's interesting. So let me pull up Coke. Give me a second because I'm a little slow here. And I will try and get to everybody's questions. Coke, because this chart actually looks decent today. That's why I'm pulling it up to show you exactly what I'm seeing on Coke, okay? So let's just go to the 3-minute. Let's go to the 1-minute. Let's just see what makes sense. Okay, now let's pull it into StreamYard so you guys can look with me. I'll make myself pretty small. All right, so I've got the 1-minute chart up here. You could say here's the start of the day right here. So it sold off right before the close. Spiked on not so heavy volume. Once we got to the top, they sold it off. Again, there was some buying here. So there's definitely probably an institution or two that's interested. You could tell by this volume right here at 59. What are we at? 59, probably 88. They were buying it. So right here at 59.91, there's good support. Now, where can Coke push up to? You have to understand, Coke in the last, 20 minutes was 50 cents higher. So yeah, I think a positive bullish Coke trade would definitely make sense today, unless you think the markets are going to throw up on themselves. But looking or zooming in at the 1 minute, there's definitely interest in Coke. The volume's pretty good, so I'm assuming all of the market is probably picking up a little. Let's see what QQQ is doing. Or actually, your other question was what? Bank of America, BAC. So let's take a look at BAC. Again, another Dow play, another play on interest rates as well. So let's get Bank of America up. It's up 1% today. Let me just make sure it's on here with us. It is. Great. So again, I'm going to go to the 15-minute chart first, which allows me to zoom out. Let's just see if we can use any. No, it won't let me use any indicators right now. So I'm just seeing, here's a little curvature up with a drop, curvature up. It looks bearish. I wouldn't be buying this right here at the 15-minute chart. I can see it. Nope, 15-minute chart. Still, there's negative selling pressure. I wouldn't be playing Bank of America right now. It got a pop this morning, and they're selling off the pop. Now, if it consolidates, all right, so if you're watching Bank of America and you see green down here and you see the volume picking up to like this level or this level, so you see it consolidate maybe around 31.60, 31.65, so like 20 cents lower, which is, like 0.7. So maybe 20 cents lower. Again, it could go 40 cents. It could go 50 cents lower. You have to find support before you get into it. So if I were going to play Bank of America right now, I'd be playing bearish puts for about 30 cents lower. So we're at 31, 31.81, I would say. We'll probably see 31.51. And again, this is just me looking at the chart right now. So let me see if we have anything else. More questions. Ooh, more meme stocks. Yes, I like meme stocks. So Red, what is it? Redbox, right? Red, yeah, let's check out Redbox because I haven't looked at that one. And here's the crazy thing. Before I bring up Redbox, here's the crazy thing. If you're on Discord and you used some of our channels and you looked at Redbox yesterday, or actually going into the close on Monday, there was like $6 million worth of unusual options activity that told me Redbox was going down yesterday. And we saw it go down. It was like as high as like $12.60. And I think it closed around $9.60. And I don't know where it opened at today. I'm assuming the markets are up, so it's probably in the $10 and something range. But here's the point. $6 million of unusual options activity on Redbox. All you have to do is hit it because I follow meme stocks because I wanted to look. So I did. I'm like, wow, they really think it's going down. And I looked, and at market open, it was 12.60. And I'm like, okay, well, let me focus on other shit. I looked back, 10.60. It got a bounce at like 1 p.m. There was some buying. And then still at the end of the day, it finished at its lowest level, 9.60. So let me bring it up. Redbox, RDBX, Redbox Entertainment, completely a meme stock. All right, so it's a 1090, it's up 8%. As long as you're on the right side of these are great stocks to play. Here, let me just bring it up so everybody can see it. And the reason they're great stocks to play is because if you call the bottom of a meme stock and you called the bottom at 960 yesterday and you bought it at 960 and it goes up a whole dollar, which is 15%. So your options would probably be up. It doesn't move that quickly because I actually looked at Redbox the puts that I saw yesterday, and they only made 130%. Even though the stock was $15 the day before and was at $9.60. I was looking at the $10 puts. Now the $10 puts were like 60 something cents, and I think they went up to like $1.60. So maybe you would have made like 120%. But you think a stock drops from $15 to $10 and you're like, whoa, I should be crushing it with like thousands of percent. So that's not necessarily true. But okay, I've got the chart up here. So we're sitting at $10.92. It's up 8% today. So you have to understand right now, there's no trade on Redbox, because you have to understand It's in the middle of no man's land. Same as I mentioned for the SPY, same as I mentioned for everything. Now, what you have to see is you have to see a large position selling off and a good entry point. So, yeah, I mean, let's go back. Let's go back to like a 45-minute chart so we can get some more in here, because now we'll get a couple of days. We're June 6th, June 8th, which is the buildup. Anytime the volume is spiking, similar to it is today, and it's flattening out, which is consolidation. So you really need consolidation, okay? It gapped up here, and what does it always do? You see, you knew Red Blocks is going down because it filled the gap. So understand, there is still a gap to fill all the way down to $8.63. So on a zoom out, I wouldn't be entering this stock right now. If I zoom in, I still would not be entering this stock right now, because I literally think it could go down today to about $9.60. So if we're sitting a whole $1.30 higher, okay, it would be a terrible entry for a bullish position. And now you might be saying to me, Matt, I'm talking about it might go down. What do you think about it going down? Okay, I didn't look at it that aspect. So will it go down or will it pop up? Because I don't want to tell you a stock's going to go down and then if say Red Blocks goes to like 14 this afternoon, you'll be screwed. So let me just see. Volume, we got the volume on the 15. I mean, see, again, it's just too dangerous because it could easily fill the gap to the upside of $13.85. So as we sit at $10.91, I will tell you that $9.60 is a possibility today, and so is $13. And if I had to guess and flip a coin, I would say I wouldn't really know. I mean, I actually was going to say they're both somewhat likely. You could see something like it go to 9.16 after the Fed speaks. You could see meme stocks pop for no reason at all. But yeah, I mean, if I had to guess, same as Bank of America, I would say, you know, you're going to lose 30 cents first. Red Blocks, because it's a meme stock, it could lose 90 cents. 90 cents would be like, that would be pretty significant. I mean, it's only up 7% today. So yeah, I mean, I could see it turning red. Let's just see what the market's doing. Coke, yeah. So look at Coke. Coke's above $60 now, right? It was only 10 cents cheaper, but I told you, and they were buying, and you could see it. I mean, I hate showing my phone like this, but you could see that big green mark down there. Institutional buying. Somebody that's saying, like me, hey, this is a good entry point for Coke. So let's see what else we got. Okay, OXY. So here's interesting. OXY, right? Oil company. I actually like Apache, APA, as OXI. So let me see if I can pull up APA. No, and I'll tell you why, because this is unusual options activity. So Apache, APA, where is it? I think it's this one right here. Hopefully. Is that? Yeah. Okay, perfect. Yeah, perfect. Okay, so understand first, let me pull it up on the screen for everybody. Oil is getting beaten up a little. Why is oil and energy getting beaten up too little? Well, because it's been going wild, first off. Second off, Biden announced yesterday that they're announcing a release of oil. So let's just see where oil is, because you have to have oil and check it all the time. Okay, yeah, it just fell significantly. Okay, it might bounce off this level. So, I mean, this might be a good time to get in. I was looking at Apache. Oh, so here's what I pulled up. Apache, APA. And let me tell you why I pulled it up. Okay, unusual options activity, okay? So the unusual options on Apache yesterday were 500% the normal volume, okay? Here's what they did. They went out until October, okay? So you're talking about 4 or 5 months. Now, as Apache sits at $45 and change right here, let's just say $45.50, and I'll pull it up just so you can see $45.50 right there, $45.48 it is. Okay, so as it sits here, I look at the previous, and I'll do it with you. I'll look at the previous chart, and let's go back to probably even a day chart. Let me just see. See, I get these stupid ads that pop up all the time. Oh, God. All right, so here we go. Day range. Nope, that's not it. I don't know what 1R is. Day. Okay, 1 day. Boom. Okay, here we go. Day range. But let's get more time. Okay, so we can go to StreamYard. You guys see it? Perfect. Okay, so here's the catch about Apache, right? $52 is its high. All right. Now, I say to myself, and this is good for OXY, which is why I'm bringing it up. I say to myself, Oil, which is beaten up today because we're releasing some oil. So it's 117 right now. Okay, 117.62. I say to myself, oil is more or less likely to go to 120 to 130 to 140 dollars by summertime. So a month from today, when we're in mid-July, and oil is $131 a barrel, up $14 a barrel, all of these oil companies, Apache, OXY, these petroleum companies, they're all going to be significantly higher. So today, yes, Apache's off 1.14%. And your oil company, let's look at OXY. I'll do it for you. OXY is, let's see, OXY. Okay, it's off 2.63%. So it looks like poopity poop, right? So no, I wouldn't be buying it this second, but at the lowest point you can find today, hell yeah, you could have first entry into there. Why? Because oil is going back to 130, which it hasn't been at. It is probably going to 140. And these stocks, Oxy will probably be $76. Apache will probably be $62 or something to that extent. So yeah, these companies still have, I believe, significant upside. Now, as the market gets beaten up on any given day, and I'm sure in the last 20 minutes, the market probably threw up on itself because that's what it's looking like. Let me just take a quick look. Let's see. Okay, so Coke just bounced again, but obviously, okay, so here's the great thing about Coke, okay? If you didn't get in, and I told you, you're looking for a best entry, and if I told you they were buying just under $60, and then the market just threw up on itself, and we'll use Coke as an example here. This will be perfect. And oil companies too. In fact, for the day, I bet you Apache will be $46.50. So I think Apache will go up a full dollar, which is 3% higher from where we are now. So yeah, I'm saying your OXY too. Let me look at that one. Okay, so let's bring that up again. Because again, I believe the market is showing strength. I don't think it's going to go up in a heart, just directly up. Of course, there's going to be non-believers at every freaking level. Market goes up, non-believer. Market goes up, non-believer. So yeah, I mean, your Oxy at $60.32 on the low. Here's the chart. Here's the little bottom thing. Yeah, I mean, I think it's going back up to, it'll probably touch $61 at some point, which is 40-something cents higher than where we are. And Apache, I'm saying 3%. So you know what? I mean, it wouldn't even surprise me if the end of the day, if this turned positive and oil rebounded. And if it doesn't happen today, it'll happen tomorrow. If it doesn't happen tomorrow, it'll happen Friday. The point is, if you want to invest in oil companies, OXY, Apache, Halliburton, any refiners, ExxonMobil, Chevron, any of these companies, they're going to move with the Dow first off. And there's always demand for energy and oil. And I believe oil is going to go up. We only have so many barrels in our reserve that we can release to reduce the price. So when he drops 45 million barrels, President Biden, out of our reserve, yeah, it's good for like 5% of what our daily use is. I think we use 200 barrels a day. Let me just see if we have any other ones here. SPY dip, Woo, SPY dip, other metals, commodities. Yeah, so I mean, I shared a picture this morning. Materials chart. I wish I could send it to myself. Let me see if I can real quick. I mean, you guys are here, so I'm just not very good on the phone. But I'll show you a chart of why materials plays makes sense. Compose. Fuck, I don't even know how to do this. I guess I would find the picture first and then send it to myself. So let's see if I still have that picture. Yeah, this is definitely a coffee time. Here it is. If you want to get a cup of coffee, it's going to take me probably 30 seconds to figure out how to actually send this to myself. Yeah, it's not even freaking working. All right. I got it. There's Gmail. Okay. I'm figuring it out. And then I click there and then I send, and then I'll probably have it on my Gmail, and then I'll be able to open it up for you guys and you'll see exactly what I'm talking about. Inbox. Let's do it. Here it is. Boom. Okay, great. So let me share my screen. Let me share it with the different ways. Stop share there. And let me share it with my mail. Don't cheat and peek at my mail, everybody. Okay, share. Okay, let me get it down so you guys can see it now. Okay, so it says 0% of the S&P 500 material sector, which is the largest material play members, are trading above their 50-day moving average. Now, this hasn't happened since the pandemic started. So here's the chart. Can everybody see that? Hopefully. Let me make sure. Oh, thank God it's on there with me. In fact, I'm going to give it full room here. Okay. So I got it full room. Let's go back to mail. All right. So again, read this. 0% are trading above their 50-day. Hasn't happened. So when I show you a chart like this and I say, look at the far right where we're at that orange line. Okay. We're at the far right. It never happens. It's always up at a minimum of 20, and it generally trades within a 40 to 80 range. Okay, the top side would be 100. We are at 0. We are flat. So just, mathematically, data, any type of information, you know that even if it's not the absolute bottom, it is going back up. So yes, I like material plays. I will like commodities, but not yet until I see the bottom. Again, commodities to me are like crypto. They're going to follow the market. They're going to follow demand. So until the market bottoms and says, okay, maybe it's over, commodities are still going to waver as well. Same with a lot of stocks. Just because you see demand coming back, the market has to stabilize. And the day it stabilizes, you're going to see some of those stocks go through the roof. All right, everybody, that's 30 minutes. I got to jet. I don't want to ignore my Discord, and I got to drink something, and I got to rest. I'm just getting out of the hospital, but I did clean up today. So I appreciate everybody. I was like freaking Grizzly Adams. I didn't realize till last night when I finally had a clear head, I'm going to start shaving. And like this just hair was coming off and it was gray and this and that. And I'm like, I am just disgusting. So now I am focused. We are going to make some money, and I'll see everybody back on Discord. Thank you for joining me, everybody.